Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. mid-session brief. Today, we're going to have a little strategy session. We're going to be talking stocks, Forex, and a metals market scan. I think it's an interesting time to be in the markets. We've also got a couple of big news stories that we need to talk about. One is potential insider trading. I talked about it last Friday in Bigger Than Life Monday morning. There's some prima facie evidence out there that somebody knew something. I'm going to walk you through the scenario and how insider trading works and how, sometimes you can have a great trade. Sometimes you can have your best technicals. You can have discipline. You can have anything you want. But if there's a game going on, you don't have a chance. And that's a real big part of what's happening here in the markets today, especially with the war talk. We're going to run through some war scenarios. We've got a lot going on with regards to potential talk about the next step in the Iran war. At this point, it's sort of been a war of attrition, and we're at a stalemate. The basic deal is the United States and Israel have the big guns. They can hit any military target that they want. But is that going to be enough to achieve anything? And right now we're sort of on the brink of an energy war. You don't want to see those energy facilities get destroyed on either side of the Gulf. We're going to talk a little bit about that as well. Remember, if you want to trade anything that we're talking about today, be sure to check out Switch Markets. They've got a lot of bonuses over there right now. I think a $5,000 credit bonus. There's also a $50 free trade for a $50 deposit. There's a lot going on over at Switch, so be sure to tune in. I'm sort of interesting. I got a big benefit actually, or almost an honor from Switch the other day. I was really, really pleased to see it, and we'll talk a little bit about that maybe in a minute or two. I'll show you that I'm actually going to be putting out some market analysis on Switch, so I'm excited for that. I think it might be a nice place to take a look at maybe what I'm thinking towards a specific issue or a market. So I started out as a financial writer, and that's really what I did. So I'm going to have an opportunity to do a little bit more writing aside from my daily trade ideas over here at How to Trade. So that cooperation, the How to Trade Switch Markets cooperation, going strong into 2026. I'm very happy and pleased to be a part of it in any way, shape, or form. So good to see everybody back in the room. Jason Maxon, sup, Jay? How you doing? Bobby Bob, good to see you. Bobby Tuku and Andrea Garwal, good to see everybody back. I think it's going to be a fun session. If you have any questions at all, be sure to reach out and ask. That's what these live streams are for. They're interactive. I have a few things that I want to hit and a few markets that I want to hit. But if you have any questions at all, that's what these things are for. That's what these things are for. So there you have it. Kirsty, good to see you, Kirsty. Tina Jane, good to see you. Tina, welcome. Doing well. All right. Fantastic stuff. Let's get started with some price action on the Forex. This is a market scan. It's sort of a strategic live stream. We're going to talk some news, and there's a lot to talk about, but let's start off with a few levels. This is a good one. Dollar yen, weekly chart. When I go to Forex, when I trade Forex, I get asked this constantly. What do you think about time frame? What time frame should I be trading? What should I be doing? And of course, that's different. We do everything from 1 minute time frames. I've even traded 30-second time frames live for you. To me, when it comes to Forex, I love my macro levels. I really like market state. I like breaking down exactly what's happening in the market and then stepping up and making an educated decision on where exactly to enter and exit the market. Entering the market, no matter what your technical analysis is going to be probably the easier part of that equation. Anybody can grab a technical tool, whether it's a moving average or Bollinger Bands or Fibonacci's or market profile. We're going to talk market profile in a minute. It's not really hard to figure out where to enter according to a technical. What's difficult is figuring out where to get out, whether you're wrong or right. Stop losses, you need to know that before you ever get into a trade. And your profit target, you also need to have an understanding that the market doesn't necessarily follow through on each and every trade, and that's the hardest part of trading. There's no question about it, is trying to figure out, okay, how far is this market going to go? Well, if we knew that exactly to the T, we probably would have been trading crude oil yesterday morning. I'm going to show you that scenario. Unbelievable stuff. But my point is this: I like to be conservative with these trades because they give us a real good chance to succeed as long as we don't want too much. We ran through the gold scenario, why I was very disappointed, and sort of unpacked that trade. I heard from a professional trader down in Australia that said they really were thankful that I went through that losing trade and broke down exactly what I thought about it and what we could have done better. I think that that's always important. When you lose, learn as much as you possibly can from losing. Not everybody does that, and me included. I've had those losses where I just go, and I'm so sick to my stomach, I don't even look at it. Well, you got to look at it, and you got to get into those losers. You are paying for information. You will learn more by losing trades than you ever will sitting here watching live stream after live stream, video after video, reading analytics from all around the world. You will learn more about yourself as a trader by getting in there, going for it, losing, and then taking a look at what happened and picking yourself back up for the next time. That's what it's all about. That was one of the first lessons I was ever taught. I said, Shane, what taught you how to trade? And I remember like it was yesterday. It was my mentor, Gary Vernier. He sat me down. He says, you learn by losing. You learn by losing, but don't lose too much or you won't have a job. So it's a catch-22. You know, losing is not okay, but when you do lose, learn as much as you can about it. That's all I'm going to say. It's very, very important. So for my losses and my beats since 2011, typically they always come the same way. I'm either chasing a loss, over-leveraging, over-trading, or I'm trying to hit the 5-run home run, the 10-run home run on a trade like we tried yesterday on gold, and it just flamed out. Should have just taken the $10, easy 100 ticks, take the money, walk on to the next trade. Decided to go for a little bit more and didn't get it. So a lot going on with the psychology, especially in markets like this. Especially when we're faced with the volatility that we're being faced with every single day. It's easy to get lost up here. Keep your feet on the ground. Keep your head out of the clouds. Learn from your losses. Don't ignore them. All right, U.S. dollar, Japanese yen weekly chart. Love my macro levels right there at 157. That's a good one. You can see we've got compression, sort of 2-week compression. I wouldn't be surprised if we get a little washout beneath last week's low. However, that's a juicy level, 157 even. And then you've also got that 13-week EMA down there, which is right around 156.66. That's a big one as well. So definitely keep an eye on those levels. As far as the dollar yen, where people are getting into trouble right now is they're trying to go down to charts that are very, very small in duration. They're looking at dailies. They're looking at 4 hours. And right there, I can tell you immediately by looking at our weekly chart, we are in a flat spin, meaning the market's going nowhere. It is flat. It is absolutely flat. When you see that very, very tight weekly range, you need to wait for this thing to open up before you go to those lower time frames. I'm not going to tell anybody what to do or how to trade, but that's just my view. I want to see this market get out of equilibrium. I want to see it get into a state of disequilibrium, and there's a couple of ways we could do that, and one's with a big sell-off. So I'm watching closely. You see the last 30 minutes have been relatively bullish. Nice range, I guess, 9 pips, 21 pip range in the last 30 or so. So that actually just happened. That's the last 5 minutes. So you got a bit of a breakout to the high here, trading right around 159. You know, if you wanted to make an ultra short time frame trade, maybe you could do something like this on a 5-minute chart, potentially looking maybe for that spike low to a spike high and just work those levels until you get a pullback right around 159 to the bid. I mean, you certainly could do that. For me, I have no interest in chasing the Forex around right now. I want to set back to my weekly and just take a look at my levels and know what I need to have happen before I make a trade. That's absolutely huge. So definitely, let's see. T, good to see you, T. A lot of new names and faces around these days. Great. T Solo, salute. Tell me what you think of the US 30. All right, let's do it. Let me see, Hussam, what is the gold plan? I've got gold ready to go for you. 512 Eli, it's a tuition fee. You can look at it that way. Let me see. Tina Jing, yeah, I've learned from my entry today, but definitely break even, but definitely learned a lot from it. Learn as much as you possibly can. You know, some of these trades, you're not going to learn much from them. They're just going to go up. They're going to get their points, and you're going to be like, okay, I'm the greatest trader ever. Well, it's when you lose. It's what happens when you lose that really matters. It's how you get up off the mat. It's what you take away from your losses. Ralph H., good to see you, Ralph. Welcome. All right, let's go ahead and start with this US 30 here, and then we'll cover pretty much a ton of stuff. We got a lot going, so I'm going to try not to talk too fast. But an interesting type of a dynamic that we're looking at right now for the US 30. Very choppy. After yesterday's rally that was news inspired, basically Trump came out and said that they had a tentative deal. It's starting to look like a lot of that was nonsense, but it did move the market. So you opened up on the bull this week, which is sort of what everybody wants to see. They want to see this Iran war wind down, at least from a trading perspective, to maybe stop the exodus into bonds. I'm going to show you the 10-year yields and what exactly is happening. Those yields are getting pretty high. That's going to be a drag on everything. And we'll discuss it here in a second. I don't want to get ahead of myself. But US 30 weekly chart, definitely take a look at it. You're in a losing streak here. The reason why is because you've got a war. You're fighting a war. We're in week 4 of the war, so that would be 1, 2, 3, 4. Pullback zone right around 47, 193. Because bond yields are high, and they're going up and up and up. I would definitely still bearish stocks, especially with this much angst in the market. I feel like yesterday was just sort of that euphoric bump. I'm not interested in getting involved at all. I mean, at all to the long side just yet. I think those are fleeting. We've got to see something else happen here, and we're going to talk about the scenarios here in just a few minutes. But right there, for me, I think a 38% sell right from about 47,193, somewhere in there, maybe 47.2 could be just a fantastic entry. Maybe get that tomorrow. You might get it later today. But right now, we're well off of yesterday's highs. Very important that you don't just look at a session-by-session market analysis and say that it's everything you need to know. Don't just look at one session or one 20-minute span of 5-minute candles, because you're going to lose the plot. You're going to lose the picture. The key is you're going to say, okay, what is happening right now since the weekly open? Well, what's happening is we had an ultimatum over the weekend. Trump backed off the ultimatum, said they had a deal. Everybody went crazy, threw a big party, bought all the stocks up, and now reality's starting to set in that we don't know any more today during the mid-session than we did yesterday morning. We don't know. Nobody knows. And so that euphoric high is fading, and it's fading fast. So one of the ways that you can sort of bake all that into your analysis is by stepping back to a weekly chart. Now, I know a lot of you don't trade weekly charts, and that's fine, and that's cool with me. The big thing you got to remember is weekly charts can show you a lot about where we've been, especially over an important duration, like maybe in between Fed meetings. How about during a war? Show you exactly where we were. We were up here at all-time highs, and then bang, then all of a sudden things changed. Doesn't take long, right? In any case, that's a pretty good sell right up there at 47.2. From the 60,000 feet perspective, maybe we want to back off to a monthly, and you can see exactly what's happened. I mean, it is truly dreadful. It really is truly dreadful what happened here. That's a massive sell-off. We washed out so huge underneath February's low, and it's been absolute annihilation. It's been annihilation for retail longs that have just sort of ridden the pony to the promised land, and then bang, done. So, a couple of things we need to look at, right? Last springs, that's the tariff craziness, the tariff panic of 2025. You can see that long tail, nice bounce up. What are we thinking here? Maybe this is just the Iran panic of March 2026, and then you're going to see the uptrend resume. Of course, it's certainly possible. A couple of things that are going against that right now, though. Number one is inflation. The Fed says they're going to keep rates higher for longer. That's going to put downward pressure on stocks. It just is. It's going to restrict that money flow. Now you're starting to see that show up in your bond market, where all of a sudden yields are going up because the powers that be are trying to attract more capital out of the system. It's a fascinating dynamic. It's something that's really been a drag on stocks and definitely been a drag on metals. So what can we do with this? Basic Fibonacci retracement going from that COVID panic low right up there to that all-time high above 50,000. And I mean, it's like clockwork. I mean, that's like clockwork. 45,185, you hit it almost perfectly to the T. 45,163. A couple of things that I'll address right away. Typically, I would be looking to run Fibonacci's off the most current wave count. You could say, well, that spike low there to that spike high, would that give us a Fibonacci? I'd say, yeah, probably would. Let's have a look. You can see sort of fizzled right around 62%, right around that moving average. Quick sell-off and then a bounce back this month. So that's important. But the bull run that developed since sort of the tariff panic, I based my Fibonacci's off of the COVID lows forever. And right there, you can see that's a bona fide panic. That was a market panic last April. What do you have there? You have a nice, clear, defined spike low. Really hard for me not to take a look at maybe the last 12-month range, which basically is what you're looking at. 11-month range. Hits it perfect. Huge sell-off, rebound, uptrend, washout, 38%. So long story short, we're still bullish here for the US 30. Definitely keep an eye on 45,160 down there. If you get a chance maybe to bid right in that zone, probably a pretty strong one. But bigger picture, what can we expect moving forward? If this war doesn't get wrapped up and it starts going into 5, 6, 7, 8, 9, 10 weeks, and you start to see the impact of this energy, this energy crisis, then stocks are going to be in big, big trouble. they're going to be in big, big trouble. And we'll show you the 5,200 crossovers here in just a little while. The game is definitely changing with risk assets, and the sentiment is a little bit different than it was not too long ago. So hope that helps there, T. I haven't looked at the US 30 in quite a while. Let me see, Usam, what is the gold plan? Yeah, I'm going to talk gold here in just a second. All right, let's go ahead and take a look at our week 13 fundamentals. You can see Tuesday was the U.S. manufacturing PMIs. Those mean less than nothing in this news cycle, but I'll go over them anyways. Wednesday is the UK CPI. Keep an eye on your Great Britain pound as we get into that Wednesday Forex session. That's going to be big. EIA inventories. EIA inventories are going to give us sort of an inkling about what's happening to the current oil production here in the United States. And as you see that maybe potentially Gulf oil coming offline for a significant period of time, those EIA inventories are going to be even more important. So we're going to be watching that closely. Thursday, initial jobless claims. Yeah, I mean, they're going to be, I guess, a little bit important. I don't believe they're going to bring any weight at all with them. Thursday is going to be quiet. Friday, University of Michigan consumer sentiment. That's going to be quiet as well. I wouldn't put any stock really in any numbers this week. This is all about the war, and this is all about how this situation develops moving forward. All right, news of the day. We've got the S&P Global Manufacturing PMIs. These mean less than nothing. I mean, they mean less than nothing. They really do. But hey, if you work over at S&P Global and you're in there and you're crunching the numbers and you're coming up with all these different ideas and statistics, I mean, God bless you. I mean, I'm not putting you down. I'm not putting your company down, but these don't mean anything. They really don't. There's a million PMIs out there. This one is, how is it different than the ISM numbers? You know what I mean? These are just metrics that economists look at because they're trying to figure out the trends in the economy ahead of what we know, just sort of as traders. Do you need to know this stuff as a trader? I don't think so. Why did I bring it up? Because it's important that we understand what moves markets and what doesn't. We saw a tweet from Trump yesterday on Truth Social. It moved the markets more than these numbers ever could. So when you're looking at your economic calendar and you're saying, okay, Shane, what should I be looking at? These are 3-star events. Supposedly, these are going to drive participation to the futures, Forex, and stock markets. Are they really, though? Not really. If you're trading a 1-minute chart, you probably should be aware that there could be a flurry of activity based on maybe some algorithms that are trading these numbers. But are these going to produce a trend up or a trend down day? No, they're not. So if you hear somebody sitting around saying, oh, these PMI numbers are this, that, or the other, take it with a grain of salt. You know, you can look at the longer-term trends if you want, but this right here, not overly important. But it is important to know that not everything that's got a 3-star event moves the markets. And this is something that did not. In any case, what do they mean? Well, I mean, basically, it's just the state of U.S. manufacturing. It's a decimalized figure that helps us helps us measure the potential growth or contraction that's going on in the manufacturing sector. Like I said, maybe it's important sometimes, but probably not. So do you need to focus on it? No, you don't. 52.4, though, that is above expectations and above the previous release. So things are looking up just a little bit. These are preliminary figures. And also for March, the S&P Global Services PMI, 51.1, which is down from 52, and then also beneath 51.7 previously. What does that mean? It means manufacturing is up a little bit, services are down a little bit. It means nothing. If we see one of those numbers that's actually important, we'll spend a little more time on it. This news of the day, this was from yesterday. I didn't cover it yesterday. The 3 and 6-month T-bill yields are going up. And they're going up because the U.S. government is offering a higher yield now for these debt instruments. And the reason why is they're trying to attract money. Why are they trying to attract money? Because they're fighting a war. No question about it. So these yields are up a little bit. It's sort of sending a ripple effect through your financial system. You'll notice that you've got right here that sort of the long-term, this is the 6-month T-bill yield for about the past 5 years. And you'll see coming out of COVID, basically at zero. Bond yields were zero, and they've been on a steady uptrend right up in here as what? As the Fed has raised interest rates and sort of held them there to try to control inflation. You'll notice that these bond yields are an attempt to take money out of circulation. You're offering a higher yield, which means if I give you $100 million, they're going to give me 3.7% of my money for 6 months. Not too hard. The higher the yield, the more they want the money, right? Well, you can see that the yields were way up there. They were up above 5%. They've sort of crept down a little bit as we've gone into this rate cut cycle, but they're holding firm now and they're on their way up. And that's a big deal for a couple of reasons. Number one, this is our U.S. 10-year bond. This is an incredibly important instrument for institutional investors and also high net worth investors, things like banks, things like foreign governments, you name it. People pile into the 10-year as sort of the benchmark for a debt instrument in the world, the U.S. 10-year note. So you're looking at this saying, okay, 5.289 is from the 2007 crisis levels, and that was right before we had that massive, massive financial crisis that I lived through, and it was terrible. Unemployment was 9.5% in the United States. You couldn't get a loan. You couldn't get a job. It was misery personified. Well, right there, 2007 sort of marks the end of Bear Stearns. That was the first big bank failure we had seen in the United States in quite some time. Bear Stearns was a big one, and then we got into the too big to fail era, and yada, yada, yada. We started pumping the system full of liquidity to try to unjam what was a really steep liquidity freeze. Well, right there, 5.289% from 2007 crisis levels. Take a look at where our yields are now. They're up again today. We're up about 6% on the month. So right now, your yields on the 10-year are about 4.4, 4.20. Everybody in the world right now is watching 5% for the 10-year. If we do get up around 5%, that's going to be a big drag on stocks. Why? Because a lot of folks are going to say, I'm just going to take my money out of stocks and I'm going to put it in the 10-year. And not people like me and you. Not folks that show up, with a couple of trading accounts. I'm talking money. I'm talking hedge funds. I'm talking bankers. I'm talking corporations. I'm talking governments. That's where the money will go. It'll go into bonds instead of trying to seek those returns in stocks. Because for a given period of time, you're going to get a guaranteed return. This is the risk-free rate. As in, show up with $1 and you're going to put it in. They're going to pay you an interest rate, and you can't lose because it's guaranteed by the U.S. government. So that is an interesting dynamic right there. What we're seeing with the bond yields are definitely they've started a push fight with stocks. You can see stocks are weak almost every day now, except when there's a huge news event. And then also, what else is taking on the chin? Metals. So here's a good look at gold. This one was brought up to me. I actually got a message from a veteran trader during the U.S. overnight. I'm sorry, I got to go to sleep sometimes, but you send me messages anytime you want over at How to Trade, and I answer them when I wake up in the morning or sometimes in the afternoon. But this is interesting right here because you can see this is our 920 EMA crossover. This is gold, and this is back on the daily chart for the 17th of March. Now, you'll notice that I keep blowing this up, and I keep blowing this up. Why? Because there's our purple cell. This is the coded 920 EMA. That doji was a sell signal. It's funny because we really do get a lot of this stuff that develops, a lot of dojis develop right there around our crossovers. There's your crossover. There's your sell. That's a killer trade. Take a look at what happened there. I mean, I missed this. You can't see everything all the time. 5,000 right there. There was compression. Doji sell crossover. 9 crossed under the 20. And I mean, that's a move. That is a move right there. So you're selling right around 5,000s, and now you're down there at 44.03. That's a massive score, especially trading a derivatives product like this gold spot. Another observation that we need to look at for the technicals. This one was brought to my attention by a veteran trader over in the How to Trade community. Take a look at this. Daily chart. This is a very basic look. It's your 200-day SMA and your 50-day SMA. Now, this is the benchmark technical setup, right, for finance. I've seen people talking about this 50-200. I mean, you watch CNBC, you watch Bloomberg. The analysts always throw this up there. They do it for a couple of reasons. Number one, it's easy for everybody to understand. And number two, they can drone on and on and on about what it actually means. Here it is in a nutshell. You've got the 50-day SMA. You notice we use the EMAs on the stream usually, but we're going to talk simple. SMA, there's your 50-period SMA. There's your 200-period SMA. This is a daily chart. It's a 200-day SMA. Take a look at what happened yesterday. That low right there, 4,098.25, hit it almost perfectly. We were at 4,091.74. That's the 200-day moving average, and gold just bounced off of it. So what does that mean? It means that this needs to be the bottom of this market, or we could be going much, 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 much lower. Now take a look at what's happened here. I'm sort of stepping way out in our way back machine, but right here was our crossover, right in this vicinity back in November of 2023. This was your crossover. The 50 SMA crossed over the 200. That's called a golden cross. That's a golden cross, and that was the precursor to this uptrend. No question about it. So a lot of folks, believe it or not, the money started piling in when a technical that is this obvious Well, I mean, it generated returns, but everybody was talking about the golden cross. Now, it's funny because nobody was talking about all these weaves, sort of there's a death cross, there's a golden cross, death cross, golden cross. Well, finally we broke out, right? Well, when the 50 crosses under the 200, it's called a death cross. We are nowhere near a death cross on this gold. Nowhere near a death cross. Take a look at the distance between those moving averages. The trend here is very, very bullish, and it's relatively strong still. That being said, we're not stupid. We're not silly. We're not into just donating to the market. Oh, well, Shane said it's an uptrend, and the 5,200 says it's an uptrend, so I'm going to buy it. Okay, well, if you were going to buy down here at the 200 SMA, the 200-day SMA, I'd say go for it. That's fantastic, and it would have worked. But that's over now. What do we need to be thinking about with gold? Number one, wildly unpredictable. Bond yields are killing it. As those bond yields go up, put yourself in a big-time investor's shoes. Say, okay, I've got $100 million that I've got to do something with. Do I want to buy $100 million worth of gold right now at 4,400? Or do I want to lock $100 million in at the 10-year for about 4.5%? That's a big question. Who needs it? I mean, you could buy $100 million in gold and watch this thing sell off to 2,500 before it bounces back up to 5 or 7,500. That's what we're looking at. Remember, most venture capitalists and long-term traders are looking for 7% annually. If they can get a 7% return annually, they'll take it all day long. So as you see those yields start to creep up, it becomes a really difficult question. And if you're somebody who already has 100 million or 200 million, or let's say you're like the quantum fund where they're sitting on 2 or 3 or 4 or 5 billion, that's just in the accounts. That's not talking about what's behind the scenes. Does it make sense at some point just to say, yeah, I'll take 5% on $3 billion? Hell yes, it does. That way you don't have to worry about catching the next big run. So when we're looking at gold, we're thinking at it from a trader standpoint, not an investor standpoint. If you're investing and you own the physical metal, that's great, good for you. But if you're talking about trading, then we just look at price action. And that's something that, we're relatively well-versed on this stream. We understand price action. You can see right here, here's your gold. This is sort of what I'm looking at as far as what you've got going for your gold market. You've got a big-time rally here on the monthly chart going back to November of 2024. Big rally, compression last summer. You guys, a lot of you were here. Boom, compression, break. And now we're pulling back. This 50% zone held up very well. You've got a 13-month EMA down there at 39.90. Okay, this is the line in the sand is 62%, 3,700. If we go below that, then we're going very, very, very low. Does that happen? I don't believe so. I really don't believe so. Right now, we're trading back up towards that key level. We talked about it a lot yesterday. I said if it closes up above 44.25, you're probably going to be bullish. Didn't really work. A lot of chop in this zone. For me, I'm not really interested in picking a direction right now. I wouldn't buy it right now. And if you wanted to sell it, I could build a case to sell it if we just step back on our daily. I would say, okay, what's this looking like? Well, here's your daily chart. Very simple. Spike high right there, spike low. Run your Fibonacci's and see what you got. Something like that's not bad. You could be looking to sell. You'd see earlier today it already really cashed in, but that 44.61 zone, pretty big level. This market's really tying up. I think if you tie it up right in here and then maybe we get a break later in the week, it's probably going to come on a news event. But as far as what's the plan for gold right now, I'm on the sidelines. I mean, really on the sidelines. The only other thing you could do is use your 920, step back and say, okay, how about a 4-hour gold? Do we have anything? And you could be monitoring this. There was your sell way up there. I mean, dialed it in beautifully, essentially, right there. Boom, boom. You had a losing buy right there, and now you're coming off. So maybe you're playing for a 920 crossover on the 4-hour. That might get you involved, but you're probably waiting until later this week to do so. Pretty good stuff, though. I mean, good volatility. For me, I'm not too excited about gold right now. I really am not. Let me see Andrew. Hello from Kenya. Good to see Andrew. Welcome. Everybody, welcome to the stream. Let me see. Weekly candle shows the SMA at the same 200 level. There you have it. I mean, that's what it's all about, is when you see these correlations. Boom. Weekly. Let's go to a weekly. Yeah, I'm not seeing a 200-week SMA there, Eli, but the 50 is right there, the low 4,100. It's interesting stuff what's going on here. Typically with that 5,200, you focus on the daily time frame. You can go shorter if you want or longer, but the daily gives you a really good sample size of sort of what's going on. All right, let's talk some crude oil here. I sort of put an interesting tweet out last night over on my Shane V _trader on X, and it broke down what I thought could happen today with the market profile with regards to WTI crude oil, and we're starting to see it. So it's pretty good stuff. Let me see. Donald J. Trump is about to manipulate the markets. That's exactly what we're going to talk about. So yesterday, we had oil. We had a real situation in the oil markets. We had a situation pretty much with every market across the board, and I'm going to go ahead and show you exactly what I mean. This broke on the BBC. This is very, very simple to figure out. You can always sort of see these things on a pricing chart. In my opinion, they need to call the exchange. They need to call the clearinghouse and find out who brought this action, because this type of thing really does undermine all the markets, and it suggests that there are leaks and that people are profiteering from information that is inside. Now, insider trading or insider information is when I know something you don't, and I take advantage of you. Bottom line is this. If I know, and it doesn't really matter what walk of life it's in the markets, let's say I know that company XYZ is going to announce bankruptcy, and I know it 3 or 4 days ahead of time, I can get all my stocks out before the market crashes, or I can actively short the market. If I know, let's say I work at the EIA, the Energy Information Agency, and let's say I already know what the information numbers are, what the global, not the global supply, but the U.S. weekly supply numbers are, and I know what those are before they come out, and I go in and trade against that action to profit from it, that's insider trading. If I'm on the board of Exxon and I know that Exxon is going to just landed a bunch of new leases in Venezuela and they haven't announced them to the public yet, but I know that next week they're going to announce them, and I buy a bunch of stock, that's insider trading. All of that's illegal. It is all illegal. So here's an interesting thing, and I'm going to show you exactly what happened. Oil traders bet millions minutes before Trump's Iran talks post. You can see market data reviewed by the BBC shows the volume of trade spiked around 15 minutes before the social media post. Okay, so this right here, this is anecdotal reporting from people that don't really understand the markets, not as well as many of you do. But one thing they were smart enough to do is pull a chart and take a look at volume. However, at 7:04 Eastern Time, Monday, before the U.S. markets opened for the week, the president posted on his Truth Social platform that Washington had held a very good and productive conversations with Tehran in a complete and total resolution to hostilities. Essentially, what Trump said is that things are going to be over very soon. This is a good look at May WTI crude oil futures. You can see right here, this happened about 15 minutes before the post went out. This was at 4:50 a.m. my time, 6:50 a.m. Eastern. Somebody knew. There's no question about it. See the spike in volume, very important. You saw just on a 1 minute chart right there, 2,114, 2.14. That's big for 1 minute. Okay, and the other thing is this. They're all shorts. See the red volumes? They're shorts. Now, they're not all shorts, but a lot of them are shorts. I could pull up a 5-second chart, and we could find out to the second exactly when that block order hit the markets. I'm not going to do it because it's going to take forever to find it on the chart. So you saw a big spike of volume here for no apparent reason. Then right here is your Truth Social post. Boom. The market absolutely crashes in 3 minutes on heavy volumes. So if I know exactly when somebody's going to make an announcement on Truth Social, or whether they're going to say something about the war, or whether they're going to say anything, and I go short and I profit from all that big plunge, is that insider trading? 1,000%. It's not a lucky guess. Not with that kind of granularity. I'm sorry. It's not. This is going to be an issue that we're going to deal with more and more and more as the year goes on, and as we get into the future. The bottom line is when you have world leaders and people that are influencers, and I'm not talking about an influencer like your favorite podcaster or your favorite follow on X or any of that. I'm talking about the President of the United States. I'm talking about government figures. I'm talking about stock insiders that are saying things ahead, or they're capitalizing maybe ahead of something that's being said. It puts us into an incredibly problematic situation. Now, the White House has denied everything, and I would expect them to, because I'm not even saying that this is intentional. But let's say that tweet or that Truth Social post was already written and scheduled, And let's say somebody at the platform saw it, or let's say that there's an actual leak that's leaking this information to the exchange itself. It needs to be investigated because you and I don't have the benefit of that doubt. And that brings me to my next point. If you're in a trade and something like this happens to you, I don't care how good the crossover is. I don't care how good the Fibonacci level is. I don't care how good anything is. The only way you survive this is to have risk management. That is it. And I mean, that is truly it. So always understand that things like this can happen. This is called systemic risk. This is the risk of things going haywire and you being stuck there holding the bag. That's why your risk management has got to be dialed in. You have to understand that even though we can go through and take 500 trades and have nothing bad happen to us, that can happen to you. That happened to me last summer in gold. And I thought, well, the market's just fluffing up a little bit. And I stayed for 2 minutes and got absolutely destroyed. It was on a bullish gold breakout right after somebody said something that they shouldn't have said during the U.S. session. That happened to me. I was there. It cost me $3,500 in about 5 minutes. Now, I did have a chance to get out at break even, but I was greedy and thought the market was going to reverse because there was no rhyme or reason to it. And when you watch the markets for decades, you sit there and you go, what the hell is this? This doesn't mean anything. This is noise. And you ride out the noise enough times and you get really confident about what you're doing. And in that situation, I was going up against a monster and I didn't know what I was fighting. And I was fighting somebody that was on the inside and I was fighting something that was driving mad participation to the markets. Understand, if you don't understand anything else about trading, you don't have to know the technicals. You don't have to know the numbers. You don't have to know anything about bonds. Understand that your risk management is everything. Have a stop loss down. And if you're going to be trading right now, you need to have a stop loss in the queue somewhere because these types of moves, even if you held for a minute, which is something that you guys have watched me manage trades live a lot. I like to hold it for a minute. That's my happy zone, about a minute, and see exactly how price behaves. But if I'm long from up here, maybe I'm long. Maybe I bought this pullback. This big sell-off generated a little bit. Maybe I bought right here and I'm holding. And then bang, I said, okay, it's going to come back. Well, it doesn't come back. Look how bad I'm hit. I'm getting out probably at 94, 93, 94, something like that. And let's say I'm long up here. That's a $4 move. On one lot, that's a $4,000 bill. I've been there. Cut these things off. When the market goes crazy, get out. And that's why a lot of people aren't trading right now, or they've cut their exposure. This stuff right here is going to become a bigger and bigger story as the year rolls on. I guarantee it. I won't be surprised if we have investigations or we'll talk about the midterm elections and what can happen next year. This type of stuff is a big deal, and that is just one story. There was a lot of stories about not crude oil traders, but stock traders that got long the market. They got long stocks before the open yesterday and before that tweet, stock futures. Interesting stuff. So let's go ahead and take a look at our market profile. So essentially, let's go ahead and get rid of this stuff. We're done with that. But the big thing that I wanted to point out with our market profile today is you really do have a B structure that developed on Monday. You'll notice Monday's point of control. We did a lot of business down there right around 89. And then during our overnight and what we have right now in our U.S. point of control is about 91.5. Right now we're trading above value, and we're really going towards this void. And this is what I call a chain. I put this out on X last night. Some of you saw it, some of you didn't. But this is a basic B formation. It's like a capital B, okay? And it's essentially the crux of market profile, and it's the crux of what it is to be sort of a volume trader. You're looking for areas of fair value. Okay, in our value area there, market opened up here right around 100. We traded there really through the British session, and then we got this big tweet, which dropped the market tremendously. And then through the rest of the U.S. session, we sort of traded sideways there as well. So essentially, that's going to be your uppercase B. And the thing about a B is that it leaves a real thin chain right in between the value areas. So once again, you've got a value, you've got value, and then you've got a thin chain. Essentially what happens is it's a lot like a gap. Gaps get filled, gaps get filled, gaps get filled. I think you guys have heard me say that probably way too many times. That's the gap that I'm watching. I sort of put this one out on X. I expect us to fill it in. Now, that doesn't mean you can really buy right now because it's such a big range. But if you were looking potentially to buy, you'd probably be buying the point of control, a pullback from 91.50. You could even buy the top of value there at about 92.25. Not a bad trade, but your runner, you really are looking for something to test that 95 zone. Realistically, that's pretty much the area that we're looking at. It may happen later today. We've only got about another hour left, a premium WTI trade, or it could happen tomorrow, or it could happen the next day. We really don't know. But I feel like that has a really high probability of filling in. So how would you trade that? Well, as a retail trader, it's tough because you would have to buy, right? You would just buy at market and maybe stop yourself out beneath the daily low, and that's just a tremendous risk. You're stopping yourself out down in here somewhere, maybe right underneath 90, which is certainly, it's not overly expensive if you have a lot of money, or if you're trading a crude oil micro contract where you're playing for like $1 a pip, then that's only about a $250 trade. That's not bad. Is the reward there? Yeah, the reward's there. There's at least $250 there to the middle of that range, and more than likely you're going to trade towards the top of that, 96.50, 97. You may even return to value up here at 100. So interesting stuff. You can see our opening week point of control was up there to right around 98.50. That's probably an area that a lot of folks have a target with. So basically, we traded up here, opened high, plunged, had a market driver, plunged the market. Monday's U.S. session, we traded down there. Now we've got the rebound on. Tuesday's session is set up. We've sort of got the grind, the point of control. Now during that American session today, that NYMEX session, you're pushing a little bit higher, but it's not really a huge trend day, even though you are up 5%. It's still, I wouldn't treat this as just a breakaway trend day. You're almost looking for another rush at maybe that 95 level. And if we close up there, that's extremely bullish for WTI crude. So keep a close eye on that. That is definitely a big deal. That's for sure. Let me see. Tina, let me see. Marvel, good to see you. Marvel, welcome. Diaspora, Naomi, good to see you. Naomi, welcome. Let me see. Gold might sell a bit before being bullish. I am not convinced gold's going anywhere yet. Not going anywhere yet. Yeah, Eli, I got you. Referring to the 50. Let me see. I thought that insider trading is illegal. Tina, it 100% is. I don't know if you guys remember the Martha Stewart case. This is going way back. But Martha Stewart, she had built an empire on home furniture. She had a cooking show. She was Miss Home Economics. She got in trouble. They threw her in jail for 6 months. I think it was over $20,000 for insider trading. Supposedly got a hot tip from her broker, and threw her in jail for 6 months. It was kind of silly because it was just, to her, not much money at all. To the market, not much money at all. But still, every now and then they'll pick somebody out and prosecute them. But we haven't seen a big insider trading case in a long time. And I have to think that after this war develops, and if we see enough of these things, then yeah, you are going to see more prosecutions on insider trading. How can you not? I mean, that's pretty blatant. I mean, that's pretty bold. Just betting the ranch on a short and then nailing it right, 15 minutes before the announcement. That's pretty bold. I'm surprised the brokers facilitated that trade. Let me see, Eli. They tried to do it to Oprah too. Yeah, I think Oprah got away though. Oprah had some big guns. She's in the billionaires club. I think she called the lawyers, and they said, "Nah, I don't think I'll let you charge us with that today." Let me see. They tried to do it to, let's see. He did it in crypto and now is doing it to the normal markets. I don't necessarily know that I blame Trump for doing that. I mean, I can see where somebody else would have knowledge of that without him having knowledge of them knowing. I mean, what we're using is technology. They've already proven that there's spyware. They had to fire everybody at the DHS because there was actually spyware that was installed on those phones that they handed out to everybody before they even came into office. So while I do believe that Trump does these things around the market times on purpose, he does them to prop the markets up and bring stability. And I'm sure somebody somewhere knows, and they're making money on it. I have no question about that. Is Trump Inc. doing it? That would be really bold. That would be really bold, and I think it would be worth an audit. I want to know exactly who took 2,100 contracts short right before the market like that. I would love to see who did that. The CME has the data. The brokers have the data. They know exactly who did it. They know exactly who did it. Will it ever come to light? It probably depends on who it is. If it was me or you, probably. They'd probably have us down at the courthouse by 5 o'clock today. I don't have any inside information. We have Fibonacci's and we have a little bit of Spidey sense. That's about it. Let me see. Is 5,000 points still the point of control and gold still valid? No. Elvis has left the building, Babjeez. It's not. Nope. We were way away from 5,000. All right, we got a couple other things we need to look at here today. This was one that I covered on the weekly preview. We're talking daily trend line reversal here for the Aussie Kiwi. Sort of an interesting dynamic here with the Aussie, sort of up and down and up and down and up and down, mostly down. And that's because, at least over the past several days, because gold, you're absolutely seeing that correlation. You're seeing that correlation develop in real time, just like the oil correlation. When oil's up, stocks are down. And then when gold's down, typically the Australian dollar's suffering. And that's sort of what we've seen over the past several days. So right now, the fate of this trade would depend on your gold market more than anything else. I sort of advise that potentially you could play a trend line reversal here. You can see that right on your third touch, we did get that break, and it sort of suggests that you're going to be bearish for quite some time. But do you want to go short right on that daily close? Would you be going short potentially here? You know, if you did, you're not down much, sort of a slightly bullish day. Or would you maybe want to go on a retracement? 38% sort of coincides almost perfectly with that trend line, that bullish trend line. So 2024, 2024, you're trading 119.74s. You probably could be patient, maybe wait for a better entry point, or if you were worried about missing out, you could just sell it at the market. If you were to take a trade like this, where would you be looking to put your stop loss? You know, there's a couple of modes of thought. Stop loss wise with trend line reversals, you could put it above the swing high. I'm a big fan of that. Those of you that have seen the 9 EMA trades, something like that, not bad. How about right above the confirmation bar? It's not a bad one either. It's above the trend line. You know that if this thing reverses against you, just stop yourself out, because if you get reestablished above this line, then yeah, you probably are going higher. But remember, this trend line always is typically resistance once you break it. So the idea is that support, you can see it's support here, support here, support here, and then it broke. Is it resistance now? More than likely, yeah. Now where you get into trouble is holding these shorts, and then the market creeps against you. And then initially you get stopped out eventually. So what I would do is be diligent about it. I probably would wait a little while for my entry, wait for this pullback up into this zone, maybe just 50% of that signal bar, and then maybe play it tight and look to get that big move down, which more than likely you will get if gold keeps struggling. So interesting type of a trade right there, but you can start to see exactly how much everything dovetails and fits together. Fascinating stuff, guys. Great Britain pound, Australian dollar. So real similar type of a thing. Remember, during that Wednesday Forex session, you're going to get UK CPI. That is going to shake up the Great Britain pound. So if you're trading the pound Aussie, what are you looking for? You're watching gold, you're watching UK CPI, and that's going to give you an opportunity potentially to succeed here in the next 48 hours. Now, just by looking at this price action chart, a couple of things that I love. Number one, we've got good daily ranges. So we've got an opportunity to trade some volatility. That is pretty much the name of the game when it comes to Forex. Find something that's moving. Number two, what is the spread on this pound dollar? Well, according to this, what is this, Oanda? This is Oanda data. You're looking at about five pips. 4.5 pips, 5 pips, somewhere in there. That's going to be pretty standard as you look across the brokerages, just because it is one of those cross pairs where there's not as much volume involved as, say, a Euro USD, so the spread's going to be a little bit bigger. And it's just something you have to factor into the equation and something you're going to have to overcome in order to be profitable, right? Well, what you have here is a nice big break here in this pound Aussie last 3 days. First couple things I would be doing, just price action alone, it's okay, what's going on here from a macro sense? All right, sort of have a triple bottom there. We've rejected, getting our way back machine, back from the 2024. What could we be looking to do right now, though? We could be looking to sell a macro resistance zone, something like this. Spike high, spike low. You got a nice sell right up there, right around 195. Still a ways off, but still there. Let's take a look at our weekly chart, see what we have. Very similar market dynamics. I mean, that's a monster downtrend. I mean, that's just an absolute ritual slaughter there for the bulls. But something like this, pretty good level. Resistance, where's that at? 193. So big picture, where is your potential sells? Where's your resistance zones at? 193, 195, right there, 193, 38% of that wave, pretty good sell zone. As far as what could you be looking at maybe later in the game, 62%. We also had that longer term, that monthly was right around 195-ish. So 195 could be a great resistance zone as well. You just got to be sort of dialed in on what you expect the market to do and what you want to get accomplished. For me, I would be probably pretty aggressive right here, looking to grab. Well, I mean, you got a 5-pip spread you got to deal with. So probably we'd be looking for at least 30 pips, at least. And we're going to have a trade ID out later today, so we'll have something drawn up that's official that you can take a look at potentially to get on with the trading week. Those are posted over at How to Trade, so be sure to check those out. They're on the cover of the website, and if you subscribe, get your free subscription over there. You can just join me in the trading room. Click on our analytics thread, and there it be. There it be. That's for sure. Let me see. Babgees, do you trade purely order flow and volume profile? I trade Fibonacci's, Bab. Fibonacci's I really like with Forex. Those macro levels and fractal geometry is big for me. And then also those points of control and the volume. I've started to show over the last 3 or 4 weeks, I've started to talk a little bit more about the time price offering chart and the market profile. They are advanced concepts though, so I'm not really sure how useful it is to sit there and look at it. But when I see a pattern that's as obvious as the one that's set up on Monday in WTI, yeah, volume profile can be pretty good. That's for sure. Let me see. Spreads make better traders. Well, I hate spreads myself, but I hear you. All right. So the final part of what we're going to be looking at here today, we're going to talk a little bit about where we're headed this week in the Iran situation, and then we're going to look at a couple of these key, that 5,200 SMA setup. We need to look at that on equities because we can start to build a case that the game is changing, that the bull market may be coming to an end, and we've got to really be careful about what we decide is our bias in the short term. And what it all boils down to is it boils down to interest rates in the U.S. dollar, and it boils down to an energy crunch that may be unavoidable that we're already seeing in some parts of the world. So let's just go ahead and get in there and take a look. So this is the first story that really caught my eye, and I've been seeing these over the past 24 hours. Now, we do have a lot of traders, not a lot of traders, but several of you in the How to Trade community that live in Australia, and you're there. So this could be overblown by the media, or it may be very real. But there you go. Australia lowers diesel standards in a bid to increase supply as number of service stations running empty surges. This really does show you what the supply chain globally is based on, and it's based on the Strait of Hormuz and the Persian Gulf. When you start to see oil slow down or stop out of that region, then this is what we can expect. We can expect oil shortages in a lot of places. Here. But, at least 164 service stations in New South Wales were already out of diesel, as well as 289 that were missing at least one type of fuel. There were 2,400 service stations in the state, so think about that. So 289 were missing one type of fuel, 2,400 in the state. What is that, about 10%? Roughly 8%, something like that. That's big. That means that 1 in 10 is getting shorted gas, and this is how this will start. This is how a fuel shortage begins. It starts to, okay, well, it's only one, every now and then there's a shortage here or there. Or the deliveries aren't coming through. And then it keeps rising and rising and rising until you have to take extreme measures, lockdowns, energy lockdowns, things like that. We're already seeing people talk about it. We're not there yet. But this right here is the number one reason why you see some of these other things happening in the United States. 82nd Airborne considered for Iran deployment as Marines move into position. They're talking about deploying the 82nd Airborne, which is, it says right there, it's a quick reaction brigade. And what these soldiers can do, it's about 2,000 to 3,000 paratroopers. And these folks can be ready to roll anywhere in the world in 18 hours. So they're talking about maybe bringing them into the equation in the Persian Gulf. And what would they do? They would probably be backing up an amphibious assault. The U.S. is deploying 3 more amphibious assault ships and 2,500 additional Marines to the Mideast, joining more than 50,000 troops already there. So there is a significant force that has been built up there over time. These amphibious Marines, these are the folks that take beaches. They've got the special vehicles. That's what they're trained to do. And these 82nd Airborne folks would be the guys backing them up that are jumping out of the planes. So we're starting to talk really seriously about an invasion. And why would we do that? Well, you'd be talking about an invasion because this right here is going to get worse and worse and worse. And it's not just going to be relegated to Australia. It's going to be a lot of places in the world. You're not going to get fuel. the fuel is going to be just systematically cut off. The longer that this conflict goes or this war goes, the more perilous the energy situation really is. And so this is one way that you could start to say, well, what's happening to stocks? Well, if you have a fuel shortage, you've got to stop it somehow. And the way that you would stop that wouldn't be an energy war. You wouldn't bomb Iranian infrastructure. You wouldn't wipe Karg Island off the map. You have to get this strait opened at all costs, or else those types of shortages are going to hit a large portion of the world. It's going to hit everywhere. What does that mean to stocks? Well, if you're looking at inflation, it means that interest rates aren't going to you're not going to get the rate cuts, and you're not going to get essentially the fuel you need for economic growth. It really does all come down to fuel. Take a look at this US 100. Okay, we had a death cross right here. We're in a Wayback Machine. That was back in April of 2025. There was your death cross on the tariffs, and then we came right back, and there was your golden cross, really the precursor, the 50 SMA crossing over the 200. But what's happening now? Market's flattened. Remember our gold chart? Still very, very wide. The trajectory, these two are coming together. These two are coming together. This war and these interest rates and the bond yields and everything that we've talked about on today's session, they're all contributing to potentially the top of the equities markets, at least a periodic top. This is a very serious situation. So when we start talking about, okay, what's going on here? Well, you need to figure out a way to wrap this Middle East excursion up. You need to figure out a way to get this war over, and quickly is better than a prolonged exit. So 82nd Airborne is considered. That's big. So that's a very big deal. You've also got the amphibious assault. You can see that an invasion is being crafted, at least being storyboarded. Now, you've got all sorts of things here from the Iran regime. Let's go ahead and just drag and drop this over here. Take a look at our poly market odds for today. But what you've had is a ceasefire by December. Okay, most people believe that. U.S. forces enter Iran this is a big one. By December is about 70%, 67%. By April 30th, 57%. By March 31st, 24%. So we're thinking that maybe there's a 25% chance or a quarter that you're in there this weekend. That's essentially what we're talking about. Today's the 24th of March. So if 24th of March plus 7 is 31st. 31st is next Tuesday. So when would your invasion most likely be? It would be this weekend. It would be this weekend. Now, I've heard a lot of podcasters, I've heard a lot of alternative news sources suggesting that. I want them to know right now, because I'm sure some of them are watching everything that happens on social media and on YouTube and X and all these places. I want them to know that's not really a large conceptual leap. You've got troops in the region. You're starting to bring those forces in, but they're also being disclosed to the public, which means that the administration wants everybody in the world to know that they're preparing for that contingency, especially the Iranians. So what everybody's wondering right now is, where are you going to invade? And that's sort of where the crapshoot comes into play. U.S. forces probably eventually. Where do you invade at, though? And a lot of people are pointing towards Karg Island. I was listening to a young man break down his thoughts on what an invasion here could look like. Made a lot of sense. We've already hit that, wiped out the military installations there. If you were to take Karg, what would you do? You could send in the amphibious guys. You could send in the paratroopers, secure the island more than likely relatively quickly, and then you'd send in the Corps of Engineers to fix the airstrips and everything and use that as a potential staging point. One problem is there's a heck of a lot of missiles. There's a heck of a lot of missiles on that 600-mile coastline of Iran, and also drones. So it could be – it's a very dicey situation. But most folks believe that that's on the board. What does that mean? Let's say the United States and Israel were to take Karg Island. That is the depot for Iran's oil exports and refinement. What would that mean if you took it? Well, essentially, it's a bargaining chip. You could sit there and say, okay, well, we control Karg Island, which means we control your energy exports. Let's go make a deal. Let's make some sort of deal where the United States looks like they save face and the Iranians look like they save face, until everybody conglomerates back here in a year or two to figure out the actual regime change portion of this equation, which does not look like it's going to happen anytime soon. Remember, regime change was a big part of this. Early on, you could see by a March 31st, 1% chance, 2% chance. By the 30th, a 9% chance. June 30th, 21, December, only a 30% chance that the regime falls this year. Remember when we first started this, we thought the regime might fall in 4 or 5 days. The decapitation strikes, the idea that you would just keep killing leadership until somebody stepped down or made a deal, it's not going to happen now. So what does that mean? Well, we start looking at our long-term technicals, the 5,200. We could get a death cross here in the next 2 weeks. We could get a death cross this week if price action gets as bearish as it can be. Right now, this US 100, you're trading beneath the 200-day moving average. That's big. Let's take a look at the US 500. The US 500, same. Very, very, very bullish here. You can tell by the distance between the 50 SMA and the 200 SMA. Now you're crossing over. You're trading beneath that 200 SMA, and now you're starting to converge. Is the death cross on the way? US 30, same picture. Now this bullish cross was back in July of 2025. Took a little bit longer coming back from that tariff shock than the US 100 did, but essentially you've been bullish since this area right in here, and we've sort of come right back down to it, right around 45,000. This is beginning to converge, suggesting that, yeah, the world is sort of turning. Things are changing. Sentiment is changing. Interesting stuff. It's funny because if you pull up like a silver on this, not even close. You're trading right down around that 200 SMA, but you're still very, very, very wide. I want everybody to make sure they see the difference here. It's important. This right here, and of course, these moving averages are highly sensitive to this incredible run-up right in there. And of course, we've sold off significantly since then. But this area is still very, very wide. Very, very wide. And what that suggests to us is, okay, we went way up, we came down big, but we sort of stabilized. Now we're making another leg down, but we're doing it in a much slower fashion. We didn't just go up and then crash and then stabilize and then crash and then crash. That didn't happen. So you're still holding your value in silver. You're still holding your value in gold, whereas when you look at the US 100, these are converging and they're doing it near the top of the market. Very different, very, very different. The only reason that these death crosses and these golden crosses are important, the only reason is that the entire world of finance is watching them, and long-term investors are watching these technicals, and they're watching them very closely. We're in interesting times, that's for sure. All right, getting a little bit of bearish action in WTI crude oil down to about 91.50. Nothing wrong with that. Right down to that point of control. I mean, you see, there it is. There's your point of control. There was your bounce. Now we're pushing on it. Perhaps we sell off and we ignore this chain for today. Definitely could happen. I would say that you're probably going to hit it again tomorrow, though. I would fully expect us to trade up from here, but we could wash it out too. We could wash out towards the bottom of that value area, which the bottom of today's value is down there right around $90. So a lot going on there. All right, everybody, I have droned on long enough. I hope everybody enjoyed the session. There's a lot going on, a lot of stories, a lot of big news. And as far as the invasion goes, everything I've said here is highly speculative. We're just trying to connect dots and figure everything out. But it looks to me like the invasion, the boots on the ground and the ground invasion is very much a reality at this point. I don't know that they go in. It's very risky. It's very risky. And I think if the administration could avoid that, they would. But you're seeing the gas shortages. And as we move forward in time, every week that goes by that strait's closed, every week, things get bigger and bigger and bigger from a global perspective. And the pressure to get this thing over with is going to get greater and greater and greater and greater. And with the midterm elections coming up, that needs to be solved ASAP. Now, are we out? Is this an outlying event? I don't know if it is or not. Trump said 4 to 5 weeks. He said that about 4 weeks ago. So if they wrap it up on schedule, then I expect our markets to go right back to normal. I really do. I'm not believing at all this nonsense about 4 months to restore the energy markets. You guys saw how fast that thing came down 10% yesterday. It can come down very, very fast. All there needs to be is a guarantee that supply is coming back online. And as soon as that guarantee is there, you'll see it. But if this drags out and we are at an inflection point, this week is an inflection point. We're going to learn whether this is a short-term operation or whether they're thinking it's going to go through the summer for 100 days, the full 100 days. And if that is the case, then we will see fuel prices high and oil prices high until things are rectified. That's for sure. All right, let me see. Babjeez, how's the drop in Japan's inflation rate to 1.3, affecting the U.S. dollar Japanese yen pair. Well, what it's going to do is strengthen the yen, essentially, believe it or not, because the yen is tough. The yen is tough because the inflation rate's down, so that would mean cut interest rates, right? That's what it means to everybody else. The problem that's been persistent in Japan, and one that they're worried about, that a lot of folks around the world aren't worried about, is deflation. And if you start to see inflation go too low, which is what 1.3% signals, everybody wants a 2% inflation rate. But if your inflation's too low and you slip into deflation, then you've got a problem. And that is essentially what brought about Abenomics back in 2012, was the idea that we're going to print a bunch of yen, we're going to deregulate, and we're going to try to bring foreign investiture in so our exports are hyper competitive. Essentially, they accepted inflation to kickstart the economy. So when you go into a deflationary scenario, then you're in big trouble with regards to your potential future economic growth. I know it's confusing, and it's a fine line when you're dealing with fiat currencies. But deflation, remember, Bank of Japan is cognizant of deflation. So they may say, okay, we got inflation under control, but it came down too fast. What do we do? That's a good point, Bab. I mean, right now the U.S. dollar is reacting to the war, so it's going to be stronger than the yen. But I think I still say that is going to reverse. But, you know, the outlier is this war, the Iranian war. It really is the outlier. So to answer your question, I wouldn't be focused so much on Japan's inflation rate. I'd be watching the macroeconomic situation stemming from potentially an energy problem. Japan is one of those countries that is highly sensitive to disruptions in the energy infrastructure. That's why they turned to nuclear quite some time ago. You remember the Fukushima meltdown? Well, Japan was one of those countries that dove into nuclear. Well, that's great, because if you're an island and you don't really have the ability to generate much oil domestically, you're going to have to bring it all in, right? That means they're going to be hypersensitive to any disruptions in that supply chain. That's what I would be watching very closely, is the geopolitical situation in the Middle East. But it's a great point about the inflation rate, Bab. I did not know that, but I do know the BOJ is concerned about deflation, not just inflation. Let me see, 512. Eli, sounds like a trap with high casualties. A lot of folks are saying that. Let's pray it's not. At this point, there have been a lot of casualties taken, not necessarily by military forces on either side, but a lot of casualties in these bombing runs. There's no question about it. It's sort of very tight-lipped about it all. The thing about it right now is the United States hasn't taken a large amount of casualties. And if you go in on the ground, let's say, and it's a trap, and you get trapped in there and take high casualties, then it's on forever. Then the United States will start sending, then you will see 100,000 troops on the ground, 150,000 troops on the ground. They won't be able to walk away from a major catastrophe like that. And that's what makes it so risky. That's what makes it so risky. And if it works, you may be able to wrap this thing up in a few weeks. If it doesn't work, you're back to the drawing board. They're playing some high-risk games right now, and we'll see how it works. Worrisome times. I think so. But our volatility index is down, or it's up a little bit today, 3.98%. So we'll keep an eye on the VIX throughout the rest of the week. Interesting stuff. Let me see, Vietnam. Yeah, my dad served in Vietnam. He was there. He was drafted into Vietnam. Told me the stories. Unbelievable stuff. All right, everybody. I'm going to go ahead and sign off for today. Enough war talk. Enough doom and gloom. We got to get positive and get ready to make a few bucks later this week. I think it's going to be a good week. Quiet thus far. I'm not really blown away by anything that's happening. Big trend day yesterday. Today, sort of a give back day, but now the Dow's back in the green. We're in rotation. Everybody's on pins and needles waiting for the next tweet from Trump, it looks like. So got a lot going on this week. Tomorrow is going to be our Switch Markets live webinar. Be sure to head on over to Switch Markets TV and check out what hits your notifications, and you'll get that one live. It'll be the same time tomorrow, and we're going to be trading. It's already scheduled. You can go ahead and just hit notifications and click the link, and you'll be in. And like Flynn, we're going to go ahead and run through a bunch of scenarios tomorrow, and we're going to try to get set up for the rest of the week. I think it's going to be a good one. But this week so far, tumultuous with a capital T. All right, everybody, I'm going to go ahead and sign off for right this minute. Have a fantastic trading day. If you need anything, head on over to How to Trade. Send me a private message. I'm more than happy to get back to you. I try to do so in short order. And also, watch your risk. Remember, if anything can happen at any given time, be sure that you have a stop loss down and your leverage is in check. All right, everybody, until next time, trade the action well, and we'll talk soon. See ya.